Hey, it's Clay Trader, and this will be a video chart on ticker symbol LODE. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several weeks worth of time, it's actually just the past several days broken down into 30-minute time slices. I like to this time frame. I think that's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I have done this analysis in the past, although it's been a while, but that's where these green and red line annotations are coming from, and they definitely both pertain to the chart, although that now that we have more data, I do want to make an adjustment here in terms of levels of resistance, and that is by moving this red line up to the 21-cent mark. Why am I moving up to 21 cents? Well, let's get over ourselves a little bit more data, and you can see that now. Maybe you can't see, but I guess that's the whole point of this, right? To point out where these levels are. That today, yeah, the price was rejected by 21 cents. But it makes perfect sense when you go back into the history of the chart and you see that it was also rejected a couple of times both there and there. So in other words, 21 cents has really been confirmed as a stubborn area of the chart. Today being the confirming level, or the confirming period when the price was rejected by it right there. Don't get me wrong, I'm not saying that 21 cents is impossible to break and it'll never break. I'm not saying that at all. I'm just saying that according to the story of the chart, and now that we have more data points, there are clearly sellers sitting up there at 21 cents. So for the price to break through there, the bulls are really going to have to bring their A game. So going forward this week, 21 cents is certainly public enemy number one. And if this pattern is going to get any sort of true bullish continuation, and then that big hurdle that needs to be cleared is the 21 cent mark. So definitely key level of resistance going forward. In terms of levels of support, you still have the overall one down here at 17.5 cents, which isn't really relevant anymore given where the price currently is. But I'll still leave that down there as to kind of just represent the overall chart pattern that's taking place. But more so a nearer term level of support at this point in time is going to be right here at the 20-cent mark. So 20 cents is what I would call the ideal level, meaning, Clay, what would make this chart look the best? If the price can stay up above 20 cents, that would make the chart look very powerful. Now, if the price falls below it, by no means is everything ruined or anything like that. The 20-cent mark is just simply, kind of the best case scenario going forward for the chart. All in all, though, nice way to start off the week. Good, solid volume. And now just a matter of seeing if the bulls can build upon this price movement. And I am defining and quantifying the statement build upon in regards to getting up above and staying above the 21-cent mark. So the week is young, still 4 days left. We'll see what the bulls have in store. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.